Let's start things off in Europe. I mean, it's very easy to see why people would want to avoid any exposure to Europe at this point in time. Are there any gems, though, that have been oversold of late?
Well, it is most probably not the right time to trying to pick the timing for the gems, because I think the headwinds are just very strong at the moment. You know, we have been operating on the assumptions that the Russians will keep the leverage over Europe and not switch off the gas completely. This is why we had a higher probability scenario for a mild recession. But of course, if the pipeline that wasn't switched on after maintenance on Saturday keeps being shut, this outlook will be very different very soon. But I think so it's a little bit early maybe to start to pick the bottom here, because first of all, you know, Russia has two different ways of articulating their message. On the one hand, it's a technical issue that can be resolved. On the other hand, it's the Western sanctions that are in the way of resolving it, because, you know, it's difficult to get repairs agreed and repairs guaranteed, is what they were communicating. So we also have an EU energy minister meeting on Friday, so maybe there will be some discussions also in that direction that will see us at least a partial switch on going forward. So I think just wait for the week to unfold before we come to a first conclusion already.
Yeah, and we have to get over the war too, don't we? I guess to your earlier point indirectly. Well, in terms of just preference, I understand you like Japan. Where in Japan? Why do you like it? And is that strategic or is that tactical?
Yes, so the Japan overweight is actually very tactical right now. So maybe you remember we have been overweight on the Asia ex-Japan for a while, having a very heavy tilt, looking cautiously optimistic into China already, and also Southeast Asia reopening. But I think we have been reviewing this on a very tactical basis, and we have been favoring Japan over that AXJ right now. So the main story is really that it looks like the Bank of Japan resolve will still be one where the Japanese yen will be under pressure, which is obviously helping the equities market as well. And on the other hand, we see that reopening story now around a few relaxed measures on tourism being allowed, which we understand are only, you know, measured steps towards a more return back to normal. So it's something that we feel is quite encouraging to look at it as a complex.
Right, and one of the reasons you like that is the weak currency, but it also takes you into the risk of a weak currency. Do you see the need to hedge there for investors?
Yes, well, it has come a long way, of course, and we have a lot of discussions, not just in the Japanese yen, but also in other currencies. You know, when is that time to turn and when is that time to hedge? As it stands right now, the macro backdrop we are operating in, it doesn't look like that the trends that we have been starting, you know, as I said, not just the yen, but also the US dollar, for instance, and the euro will be reversed anytime soon. So good for now.
Yeah, I actually wanted to get your thoughts on just the currency, because you were formerly, of course, the global chief currency strategist there. Do you think the dollar's extended right now, or do you see room further here for the dollar to move higher?
Well, the interesting question is typically when you ask about the dollar, it's the euro-dollar rate you're referring to. And the euro-dollar rate right now has that second component, which is the euro, which will obviously give the US dollar even more leeway to keep its strength and even appreciate even more. So that trajectory, coupled with the still resolve of the Fed to keep the foot on the pedal strongly, actually, as we learned at Jackson Hole, is most probably something that will not derail that trend for the time being in the short term. Agreed.
Stefanie, final question on China right now. We're about 9 minutes to the open here. What do you think the appropriate exposure is to China right now, whether that's equities or fixed income?
Well, we have been cautiously optimistic on the equities complex in particular, as you know. I think given the global headwinds and also the the news that coupled on the property side and also the continued resolve around following the zero COVID strategy very strictly, it's been something that had us to push this towards the fourth quarter right now, but to the fourth quarter, not the first quarter, sorry. So it's still the asset class that I think will offer the best value given what we have corrected to. It's just about getting the timing right. And we got a lot of encouraging news, and I think that's why it will also be quite a good open today, not just on the currency front, where we now have the FX deposit reserve rate being being lowered from 8 to 6%, but also we got news yesterday that the PBOC completely understands that, and the government, of course, that all the stimulus has to come in of, not all they have already stimulated on the monetary policy side, but especially in the fiscal side. Q3 is the quarter you really want to get it all in to support the weakening economy. So that gives rise to hope that the fourth quarter is the one for the turn for Chinese equities.